Hello, everybody. Welcome to the Bitcoin pre-halving live stream. And we got a lot of things to cover, so let's just get right into it. First of all, I'm not going to stream all the way into the halving. If you want to find that, there is about 30,000 people doing that today. I'll be jumping in between different live streams and Twitter Spaces and things like that. Should be an interesting time. But for me, I just wanted to just go over some basic information and then talk about dollar cost averaging after the Bitcoin halving. Is it really worth it? And we're going to take a look at some data, which really looks like it isn't unless you do this one thing. So this is what we got right now in beautiful Puerto Rico. It's 3:17 p.m. same Eastern time, 3:17, and we got around 5 hours and 40 minutes or so before the halving comes down. So we'll answer, of course, what it is. I think most of us already know that, but as people come in, I sometimes forget that there are new people here, so maybe they're not well versed about what's happening. I just had a question from my friend last week, and he asked me, he goes, "Hey, I understand that half of your Bitcoin's going to disappear. It's going to suck for you." And I'm like, "Well, that's not what it is, but I mean, that's a good try." So real quick, the Bitcoin halving, and this was, of course, put together by Satoshi Nakamoto, who no one really knows who that is, or him, or her, or they. White paper in 2008. And then 2009 with the Genesis block, and we had our first halving, which is essentially what the Bitcoin miners are mining using computational power to solve mathematical equations. And they are rewarded every 10 minutes with X amount of Bitcoin. 2009, that was 50. Then we had a halving in 25. So the miners are the one that are really, getting the shaft essentially. And then 2016, that dropped by half, 12.5, 2020, 6.25. And now in, like I said, 5 hours or so, they're going to go from 6.25 to 3.125. Great news. Bitcoin's almost at its all-time high. So don't worry about the miners too much. And if we take a look, there's a great website called Look Into Bitcoin. And I like all the different things they have. There is a link in the description where you can find all this information. Again, it's free. Great information. And it goes over everything from multiple and MVRBZ scores, and then it breaks it down by miner and miner on-chain data. So we can see here that the Bitcoin miner revenue over time, of course, has dropped a little bit. But again, that's the revenue of what is actually being produced as far as Bitcoin. Now, back in 2010, you had a Bitcoin at a couple quarters. So not a big deal if you're mining 7,000, 8,000 a day, right? But of course, as time has gone on, that Bitcoin price, we were at 73,000 just 2-3 weeks ago. Now I think we're around 65, 66,000. So miners are going to be okay, but of course it goes into half. So it's amazing to me. You're doing the exact same work. You have the exact same overhead or more, but you're getting half of the actual assets out. Again, thanks God, it actually appreciates. Now we take a look at miner revenue, because people ask this question. They're like, well, why would miners even do this? Even if the price of Bitcoin goes up, what if it doesn't go up? What if something happens and we're in World War III and people are totally risk off? Because I know people will say, well, they're just going to get a Bitcoin. Maybe not. So remember, there's two different ways that miners are paid. It's the rewards in Bitcoin, and the fees are the cost per transaction. So we can see right here, again, you can break this down, miner revenue, fees versus rewards. We can see that the bulk, yes, is miner rewards at 96%, and the fees are 4%, sometimes even higher than that. And I think with the advent of ordinals and things coming down, you can see that it will change. Essentially NFTs and Bitcoin, that will change a little bit as time goes on, especially with what's coming together with runes. And I think that's going to be a very big thing. Maximalists, Bitcoin maximalists absolutely hate it, but they're going to have to deal with it. And of course, I think Bitcoin miners, I think it was even Peter Thiel, not the investor, but the head of Mara Bitcoin mining said, in February or January or February, we saw a couple of days where, of course, the fees were more than the rewards just from the ordinals. So I can see where this could actually play into effect. And again, don't worry about the miners. They're going to be just fine. And if you're wondering, you're like, well, what are runes and what are ordinals and what about UTXO, unspent transaction outputs and things like that? I did a video. It's like 5 minutes long. I linked in the description so you can figure out what I think is the next big thing that's coming for Bitcoin, and it's really going to change everything forever. So I would behoove you maybe to check that video out. Again, it's very short, again, about 5 minutes or so check that out. But then another big question that comes into it is they say, well, Rob, what about, miners selling? because that's one of the big sell pressures are from miners, because you have to keep the lights on. This is from Crypto Quant. And in all actuality, you can see that as far as miner outflow, and they've labeled it as the last 3 Bitcoin halving pieces. And you can see that in the last one, in 2016 or so, there was a rally of major sell or miner outflow. And that doesn't mean that they sold it, but if you have a wallet and you move it and you don't really do anything until it goes to the exchanges, usually you're going to sell something like that, right? So you can see that we rallied into the halving. They were selling because they had to upgrade their Bitcoin mining operation, whatever that actually entailed. And then it just kind of fell off, right? And then, of course, we come over here to the, this will be the 3rd halving. And we're looking at 2012. I think it was May 11th or May 12th. And we can see that there was a little bit of selling beforehand. It leveled off. And then, of course, it comes up and then they sold a bunch. And then it just kind of levels off. And now we've seen since 2022, which I got to tell you, if I was a miner, I would probably try to time this a little bit better as far as selling. I don't want to sell in November 2022 when Bitcoin was 15,000 at the all-time lows. What I'd like to do is kind of sell, I don't know, maybe when we're hitting the all-time highs, and maybe in November 2021 or maybe in 2025 when it comes about. But you can see that, yes, there's been a little bit more sell pressure coming in 2024, but it's leveled off. As far as January, of course, the Bitcoin halving, with the Bitcoin ETFs, everybody was ecstatic, but and everybody was saying it was going to go up exponentially, but it never works like that. That's just how it actually goes. And then lastly, like I say, don't worry about the miners. This is the hash rate. And of course, the difficulty adjustment is changed every 2 weeks, or it is evaluated every 2 weeks. So even if miners capitulate and they drop off the network, that just means that, the difficulty rate's not so bad. Great. We're going to actually come in here and we're going to use the monies that we have because we sold Bitcoin before. We're going to keep ourselves afloat until things become profitable. And you can see that it's happened over the last decade plus, as of course the Bitcoin hash rate keeps going up, because there's miners who will say, hey, there's money to be made. I'm going to stick around. I'm going to do it. Again, don't worry too much about the miners. So that would lead me to my last piece. Well, before we go over some other good news, which is this, and it really is why it was something that I was thinking about today in the morning, which was, if we take a look at data as time has gone on, is this a good time to really continue to dollar cost average Bitcoin and or alts post-halving? I'm just going to preface it with this. I am not a financial advisor. I can't tell you what to do. So the things that I'm going to talk about are things that are important to me, and maybe this would actually include something that you could get behind. Again, it all depends on you. And again, there's also a thing called risk versus reward. Where do you want to put your money? Where do you think things are going to actually grow? Do you think this could be in precious metals? Do you think this could be in equities? Do you think this could be in real estate? Or do you think that the majority of the gains could come into crypto and it is going to be into some crazy meme coin or into Bitcoin? So again, when we're going over these things, just remember, this is the things that actually work for me, and this is what makes sense for me moving forward, might for you. So we take a look at this, and I was thinking to myself, well, let's just go back in time, because we can't go back. We can't go in the future. I'm not a soothsayer. I don't have a crystal ball. So I was going to take a look at is the years between 2018 to 2022. And I want to take a look at 3 things. First of all, let's just say that you dollar cost average from the last cycle, right? Because we all know this, the 4-year cycles. I still believe in them. We have a halving. And we have next year's the all-time high, the dip, and a reset. Having all-time high dip reset, having all-time high dip reset. Keeps happening. So let's just say for the last one that you started to dollar cost average on January 1st, 2018. The peak of the altcoins, the whole crypto market was around December 17th, 2017. Things dropped off in January. I wanted to include the whole month because actually Ethereum hit its all-time high in January 2018. So I thought, okay, this could be a good point, not to start at the absolute bottom, but just to see how it goes, because this is what we've all been doing, most of us, right? And I think when you watch this, you're going to think to yourself, okay, I've done the hard work, which you have in the bear market. That's when all the gains are made, is in the bear market. Now, all you got to do is at some point, maybe take some profits in the bull market. So let's say you go from 2018 and you dollar cost average $10 a day. Okay, $10 a day. And you go all the way to 2021. What would your gains look like? And what I use is I use Ben's website, the Cryptoverse, and this part is free, the DCA equal amount. You can sign up for that, get it free, and go over the same data. And if you take a look at it, if you would have gone from January 1st, 2018, and you would have stopped on November 30, 2020, remember, our all-time high peak for the entire crypto market was roughly November 7th, 8th, 9th, 2021. Let's just say you stopped on November 30th. And I pulled the data from November 9th, 2021. So you were dollar cost averaging quite a bit. Where would you be in Bitcoin? Well, again, you did what you were supposed to do. You dollar cost average in the bear market, you would be up 645%. You would have invested $14,000. And for Bitcoin, you'd have 105,000. Congratulations. Really good. Now with alts, a little bit riskier, but with ETH, you would have had 236,000. With Cardano, 376,000. With Chainlink, 526,000. Solana, 595,000. Matic, 698. And the king of memes, Dogecoin, you'd have invested 14,000 and you would have had $1 million back. Not too bad. And then some would have underperformed. Stacks, Atom, AVAX, Near, because they're kind of new. Injectable and IMX, Immutable X. You wouldn't have done so great. But when we take a look at this, you're like, well, that's easy. Why don't I just go into alts? Because Rob is just telling me that, Bitcoin only did such percentage up. Why don't I just go into alts? Well, you can, but guess what? Here's the historical snapshot taken from CoinMarketCap. And you can see this is from 14th of January 2018. Do you recognize some of these? Or excuse me, do you recognize all of these? I recognize Bitcoin, Ethereum, XRP, Bitcoin Cash, Cardano, Litecoin. Most of this stuff I only know about because I've been around since 2017. Most of you don't know this stuff. NEM, Stellar, yeah, probably so. Neo, IOTA, EOS, only Birdie knows that one. Dash, Monero, Tron, Bitcoin Gold, Ethereum Classic, Icon, Qtum, and there's a slew of stuff on number 19 to 50, which makes absolutely no sense. So all the things I just talked about, do you see me? Was Doge in there in the top 20? Was Matic? Was Solana? Was Chainlink? Cardano was. ETH was. Was Stacks, Atom, AVAX, Near? Were they there? No, they weren't there. And that's why it's risk versus reward. So when I talk about these things, I'm trying to kind of focus a little bit more on Bitcoin. So that was great, right? Great, Rob. We just went through a nice recap. Let's move forward. Let's say that you just dollar cost average in the bear market and you stopped at the halving. You did not buy anything else after the halving. How would you have done, historically speaking? Pretty good. Quite honestly, actually, you would have done better. If you just would have stopped buying your Bitcoin, you would have been up 817%. Now, of course, you didn't put as much in, and you have 79,000, but the return is like 200% higher just by stopping. Solana, ETH, ADA, Matic, Doge, well, okay, you got me on Doge. But if you just stopped after the halving, you'd have been just fine. And it's because all the hard work, when everybody was telling you were a moron, which is where really toughest part is, you would have been just fine, just not dollar cost averaging after the halving. Go, look, I did the hard stuff. That's it. Now let's take a look at this. What if you said, you know what? I just couldn't do it in the bear market. I just couldn't do it. Now the halving's here. I hear a lot of things about, there is scarcity. Now we're only having half of the Bitcoin that's out there. And there's rumblings of a country using Bitcoin. There's rumblings of major institutions coming in. This thing called MicroStrategy. I don't know. You're like, okay, what if you dollar cost average from May 2020 to the peak of November 2021? Essentially what we're talking about now. You'd have been done, you would have done fine. I mean, let's be honest, you would have beat the S&P 500. But you wouldn't have done too great. Look at these numbers. For Bitcoin, you're only up 200%. 200%. Let's go back here. If you would have done from January 2018 and stopped at the halving, your Bitcoin, you would have been up 817% at the all-time high. Again, if you would have gone from 2018 January all the way to the all-time high, you'd only be up 645%. So the best way you could have done things in the past, I'm not saying it's going to do that, is just stop right after the halving. And that's it. So for here, you wouldn't do so great at all. I mean, it's not that much time. Near Atom Stacks, you're up 500%. AVAX, 600%. You're still doing great, let's be honest. ETH, 600%. ADA, 940. Doge, 40. Matic. Solana, you would have crushed it. $500,000. Pretty good. But again, it just really does just come down to as far as like the percentages and how much you're up overall. And you can see that with Bitcoin, 200%, still pretty good. But it makes you think about, maybe I should get into something that's a little bit risky. Maybe I don't want to because a 2x is great. Or maybe I just stop because I don't want to get off the merry-go-round. I'm just telling you. Now let's take a look at this one. And this is where I think the bad rap for crypto comes from. When we go through this next cycle, and after we get to this blow off top, whether it be left translated cycle like Bob Lucas talks about, or whether that be in the 2025 like a lot of different traders and investors are talking about as well, or I hate saying this word, or we go in a super cycle. Yeah, I don't think that's happening, but whatever it is, this is where the majority of the people are going to get stuck. And this is where you have to be, probably some of you actually fell victim to this, which is, let's just say that you got in during the peak of the bull market, or around the peak, between the April first top and the second top in November. And you got in October of 2021, and you lasted 6 to 8 months because you're just like, there's no money in this. Crypto's a scam. Bitcoin's a scam. Everything's a scam. I keep getting the money taken away from me. You guys are liars. Where would you be? This is where you're going to be. And this is where we're going to have to deal with people coming in. They're going to be down majorly because they're going to get into the peak. And this is what screws everything up. And this is why I'm stepping down from this channel at the peak of the bull market, because nobody needs me in the bull. They need me. I think they need channels when they're down like this much and going, hey, you're down and that's awful, but this is where all the money's made. And this is what it is. So when I take a look at this data points, I'm like, why? For me, it doesn't make any sense to keep dollar cost averaging into Bitcoin. It doesn't. A 2x is not what I'm here for. I mean, I don't roll out of bed for that. I've done all the hard work. When everybody was saying, stop dollar cost averaging in the bear market, that's when all the money's made. And I would have stopped there if it wasn't for this last piece. Oops. Dynamic DCAing. And I thought to myself, okay, let's take a look at the last period. And let's go from the halving point, May 12, 2020, and if we would have dynamic DCA'd to November 30, 2021, how would I have done? First of all, as a fresh little recap, dynamic DCAing is not DCAing every day or every week. What it is time and risk bands. And it's very simple. And this is why I like Ben's website so much, because the time and risk bands are there. And what you do is, because right now we're at 0.6, I think we're at 0.65 as far as risk band, which is right here where it says no with a bunch of those. So you don't buy at 0.4 to 0.5. You don't buy at 0.5 to 0. You don't buy at 0.6, 0.7, 0.8, 0.9. You're thinking about selling over here. You don't do squat until there's a massive, not a massive, but there's a pullback and it goes to 0.3 to 0.4. Then you say, you know what? Time to back up the truck. And then when it goes even lower, you say, and this goes contrary to what most people will talk about as far as investing. When the price goes lower, you're like, I'm going to put double in. And then when it goes in this wristband, I'm going to quadruple. And then when it goes into this wristband, you 6x. If you would have done that, and you can go to the website and do this dynamic DCA. Well, that's a paid part, sorry. This dynamic DCA, if you would have done that, again, from the time frame of the last halving to the peak, you'd be up 561%. So if you would have done the other way and just said, dollar cost average, $10 a day, whatever, you're up 200%. 200% versus 561%. 213.3% versus 561%. And it's a lot less stress. You're just like, Prices are dropping. And then I put this little picture up here because these are like the little announcements on my phone where it says, hey, Bitcoin risk is 0.62 at 61,000. You're in the zero point 0.6 band. I'm like, oh, okay, don't do nothing. And when I get alerts for like 0.3 to 0.4, 0.20, I'm like, oh, that's right. I got to start buying because its price is really dropping. I mean, I'll probably be aware of that, beforehand, but I'm just saying. So that's it in a nutshell. You can, for me, it doesn't make sense to dollar cost average like I've been doing. Now it only makes sense to dynamic DCA. I probably would have done much better if I just would have dynamic DCA'd, but that's a whole nother video. And again, if you're looking for Ben's site, links in the description. That light plan is free. The one we went over. The one, the time and wristbands, there's a sale going on and it's going on until the halving. I think it stops tomorrow. So it's like $39 a month instead of like 49 or 129. So I leave it up to you. That's just what I see. Let me know what you think about that in the comments section. And then also just a couple of good points. This is positive, I think. The USDT or the Tether Treasury just minted another, $1 billion roughly. And every time this happens, we start to see a little spike in price action. Also, I tweeted this out today. Israel carried out a strike against Iran. I guess that was like last night. I woke up and I was sleeping. I'm like, oh, this is big news. But apparently it wasn't, because it was like we saw a dip yesterday, as everybody told me what a moron I am because it happened 6 hours ago. Sorry, I'm not a robot. I don't stay up all night. But then I saw this. This was good, I felt. Tehran plays down reported Israel attack, signals no retaliation. So, hey, maybe World War III is avoided. We'll see what happens. That's good. Also, I thought this was interesting. The IMF, the International Monetary Fund, says I did not see this coming. It was not on my bingo card. Says Bitcoin has become a necessary financial tool for preserving wealth amid financial instability. Well, that would be good for all the people who think that Bitcoin is unnecessary and it has no value and it's worthless and just buy gold. Take that. So first of all, this is the same IMF. They give out loans, monetary policy globally. They have 190 different countries that they service. They're the same IMF that wanted El Salvador to choose between Bitcoin and a bailout. Pretty much said, if you choose Bitcoin, we're not going to help you. Well, oh yeah, that happened 2 years ago. They chose Bitcoin, and now they're going to get a massive loan from the IMF, and they're going to be using Bitcoin. So, whatever. And then, of course, the IMF, 190 member countries, they provide policy advice to help stabilize economies, policy advice, financial assistance, capacity development. And it's pretty much run by some of the big countries that are out there. I think one of the governors is Janet Yellen from the U.S. Secretary, Treasury, and a couple other different major countries, which pretty much take a look and essentially squeeze people for their loans. But this is what they said, just real quick. The report was called A Primer on Bitcoin Cross-Border Flows, sheds lights on how the decentralized nature of Bitcoin is being leveraged to bypass traditional banking systems, especially in regions experiencing economic distress. The report highlighted significant transaction volumes, countries like Argentina and Venezuela, where citizens face hyperinflation. In these regions, Bitcoin has become a necessary financial tool for preserving wealth and assessing global markets. And this was from the report author, Eugenio Corruti, nailed it. Bitcoin transactions provide a way for individuals in high inflation countries to stabilize their savings and participate in global commerce on terms that aren't possible through their local currencies. So that's a win for us. And of course, there's some, they talk about the risks like money laundering and cross-border payments and stuff like that. And it gets kind of boring. But again, the big win for us, if the IMF is coming out and saying, hey, Bitcoin has value, I'd like the other people to dispute that and come to this article so they can stop yapping and talking nonsense, and you know who you are. It just makes no sense to me. It irritates me to no end. I don't understand why this happens. So let me know what you think about that in the comment section. And then lastly, it's not how much you make, folks. It's how much you keep. And I cannot say that enough. This was from Ashni. And there was a Trojan attack through Coinbase. No, Coinbase didn't do it. But here's what it was. She took a call from somebody because she is some type of KOL influencer type of thing. And she looked at all the information, it looked good. They had a great website. They had something on LinkedIn. They had a gold check mark on X. And she talked to them, not face to face, but through a Zoom meeting. Everything looked good. And for some reason, they said, hey, we need you to download some of our software so we can evaluate it. She did it. And then she lost 25% of everything on Coinbase. First of all, let's be honest. Really? You're going to download something from somebody who this doesn't make any sense. I can kind of see it. I can, because, you know, like you're wrapped in things you don't really know. So first of all, don't download anything. And second of all, unless you're like a KOL or influencers and work in this situation, I can understand it, but you're not. So don't do anything goofy like that. And the third thing is this. What are the rules that we've always talked about here? You know, we've talked about these rules, and these rules are right there. It's all gone. Don't invest more than you can afford to lose. Everything's a scam until proven otherwise. Don't leave anything on exchanges. Don't use leverage and take profits along the way, right? We all know these things. So don't do that. That's the big thing. One of the things I want to remind everybody is that don't leave things on exchanges. I'm guilty of this. I buy things on Coinbase. I leave them there for like a week, sometimes 10 days, but you got to take them off. Grab yourself a Tangent or get a junky ledger. I don't care. Or a Tracer or whatever else, but it's cold storage wallets. They're very easy to use. And this is the easiest. This is my preferred one. I use them for essentially 35 to 45% of my entire crypto are on these cold storage devices. So there's a link in the description. You can get it for 10% off. And I go over the pros and cons of everything. You can find that video again in the description from there. And then also, and lastly, I just want to give a shout out to a friend of the show, Tony Edwards, who does a fantastic job day in and day out talking to politicians, thought leaders, people in the crypto community. And he's got a book out. I just ordered it from Amazon. It's $18 and it's good. I mean, it looks good. And what he talks about in this book, why FTX was not the ethos of crypto, regulatory battles, SEC versus Ripple, Grayscale versus SEC, Operation Choke Point 2.0, what the future of crypto looks like, tokenization, token economy, the do's and don'ts, and why I believe the American dream can be saved with crypto and blockchain tech. We'll see. So there's a link in the description for Tony's book. I ordered it myself, $18. Check that out. And that's it for today. So that's it. Not too bad. 27 minutes. So everybody, if you like today's video, give it a thumbs up. Consider subscribing. I'm going to talk about is time sensitive. Now that we're at the halving, hey, just take it easy. You did all the hard work already, right? You did all the things that you had to do in the bear market. You bought when everybody's making fun of you. You bought when your significant other told you you were a moron. Congratulations. You're probably going to be rich. That's it. So if you want to take off, take off. Enjoy the halving parties tonight. I'll probably stop by in some things and